Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Nandan denim. It is in a tough sector and let's understand about the company and whether you should invest into it. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Nandan Denims, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Once you get the $10 membership on Patreon, you'll get access to my portfolio, my watch list, a number of podcasts that I put up every week, articles, and you can ask me questions on a daily basis on different companies and markets, etc. So join the Patreon members. There are more than 100 members already on the Patreon club. Now about the company. So Nandan Denim was established in 1994 and is the largest denim manufacturer of India. They are also into spinning, shirting, and yarn dyeing. So they have a number of products and number of things that they do apart from just making denims, and they supply to marquee clients across the globe. So they don't make these denims for themselves, but they supply it to Pepe Jeans, etc., and so many other clients that you have, the jeans clients. They have national as well as global presence and have been in this segment for the last over 20 years. If you look at the numbers of the company, and there, this is where the problem lies, or this is where the thing has got bad over the years. The market cap of the company is around 170 180 crores, and sales were down 8% year on year when we looked at the March numbers. I think December numbers are only out, March numbers are also not out. The profit has dropped by around 60% to 1.7 crores. Debt has increased. Margins have of course shrunk, and it trades currently at 8 times earnings, which is average for the you can say the cotton or the textile industry. Now what has gone wrong is that the debt has increased, and because of this pandemic, the lockdown thing, and so many other problems, what has happened is the textile sector has seen the worst phase over the last 6 months. Apart from that, over the last 2 years, it has been a very tumultuous period for the textile sector because the industry itself was facing a lot of problems with respect to exports, with respect to the pricing, with respect to cotton prices, etc. And eventually raw material prices were going up. There are labor prices and labor problems that were taking place across the board in the textile segment, and so the demand was also dwindling because of the global, you can say, recession, virtual recession in this space. And so all these things combined, plus what has happened over the last 6 months, has led to a total capitulation of this industry as a whole. And this is the reason why I have also not put up uh, even 2 or 3 videos on the textile segment over the last 6 months, because this sector is completely in disarray at the moment, and I would not like you to people to get stuck in such a sector, and that's why I never talk about it. But just wanted to let you know what are the issues, because a lot of queries do come in with respect to the sector and stocks in this sector. So just wanted to have a snapshot of what is going on, taking into account example of Nandan denim. So why is the slowdown? Erratic power supply is one of the reasons. So in India, that this is a huge problem, and although power for all was taken up by the government, and it has been done pretty amicably by the government over the last 5 6 years, but due to the lockdown, the things have got a bit up and down, and over the last 4 5 months, uh, power supply has also dwindled, and we have seen that compared to Western countries, compared to developed nations, power supply in India is pretty irregular. Capacity utilization was at the lowest level before February and gone down even further. And you have to understand that this is a high capex business, and when in a high capex business you have a situation where demand is very low, then you have to spend on fixed cost, and the fixed cost of machinery, fixed cost of you can say the plant or the capital that you have put up, and that is huge for a company like in textile or Nandam, compared to companies in IT sector on services sector. So highly capital intensive business, low productivity of labor. You have a number of laborers working for a particular product, and on an average the productivity is lower than compared to again technology firms or you can say services firm. And competition from other Asian countries, Bangladesh has come up in a big way, and it has really taken over that mantle from India that India was, say, a decade back. And now Bangladesh is that low cost producers, and even they are suffering big time because of the things that are taking place. And the industry is in complete turmoil even in Bangladesh. Now Bangladesh and Vietnam are two countries that are taking over from that labor kind of businesses from India, and that has also really uh, really had a doomsday effect on the Indian textile market. High excise and import duties are another worry, and really importing, you can say, better quality cotton from abroad or raw material from abroad has become quite a challenge. And in this difficult environment, importing any kind of goods or services, especially from East Asian countries, is becoming difficult because there's a lot of check and balances on the ports. So all these factors combined has led to finally what the numbers on the bottom line, which has completely shrunk and dwindled down to virtually nothing. And really, if you are looking for a 8-10 year play, then you can probably have a contrarian buy in this, but again in the next couple of years you'll miss out on much of the earnings in other sectors that would continue to do well. So my call in this regard, in this sector, and if you are holding on to the stock, any rise or any big movement in the stock, you need to exit, because the next 8-10 quarters I don't see any kind of movement. I think the next 3 to 4 years will go away in this, it will go away without any materialistic movement in the stock price and materialistic movement on the profit front for these companies. Avoid and let the numbers turn around. So a simple thing is, if the numbers turn around and you get the stock even at say 100 it's better to buy there, because you know the visibility is there and everything is fine with respect to the numbers. And the sector is coming back, you will have a better traction for the stock. But if you just continue hoping for the numbers to improve and just buy the stock at this point of time, you might just wait 1.5 2 years, and it would be a very painful wait going forward. The whole sector is in turmoil, is in difficult terrain and under stress. It's not just Nandan denim, and you need to avoid this. I think the whole textile sector, textile ancillary companies, you have like Lakshmi Machine Works. I think that's one company that is very good in this sector. Avoid all companies and let the sector turn around, and only then look at the top quality companies in this sector. Look for cash generating businesses. Don't look for these companies which have high gestation period, which are capital intensive. It's better to look at cash generating businesses which are in the consumer domain. I am again saying, because those companies will keep growing, will keep churning out cash, will keep churning out higher profitability. And only put 5% of your total investment in such stocks. So this was a video on Nandan Denim. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.